Cheers to OPEX Retail Trading Team. This is Mastro coming to you live from Puppet Show Central with your routine briefing. So just a quick briefing today. We're still in the same range as we've been in, same range that we've been in really all month. So we're just going to kind of review everything we got going on, and I'm going to let you go pretty quickly. So thank you for tuning in, and we're going to just start here with our warm-up and see what's going on there. More of the same. So the difference today rather, from the overnight session, we did have that balanced and neutral inventory, which adds to the indecision factor, and that's kind of why you're seeing this more rotational TPO with a wider range. You had that big move yesterday, and now we're kind of uncertain where we want to go. So we are at the price that we've been all month. When balance is uncertain, we like to kind of go toward the center of it. And as we've been moving along all month here, it's been about that 4150 area. As I've been saying, the battle of this 4150 area is going to decide, I think, the next trend. So it's really that 4150 to 4190 range. So we'll see what happens there. The bulls have already unwound that open test drive. So usually that means that we auction in the opposite direction. Yet I just want to emphasize on OPEX, nobody really knows what's going to happen. So OPEX is a particularly random and chaotic day, which for me just means the best signals and definitely a lot of avoiding that crystal ball mentality. So Mr. Juiceball thinks we're going to 4177 on ES, so I am definitely going to maintain my short position after reading that. 4150 SPX, yeah, that is what I would consider a high probability possibility, Mr. Juiceball, but because we've done this whole rally at the beginning of the day, literally 7 days in a row, I'm going to be fading that. And in fact, I am fading that with MES, as we'll see here. I'm currently down my MES position because I did take a stop at the unravel of that open test drive, but I'm trying it again. So I learned yesterday not to go full size contracts with these speculative plays because my stop was at 7150, and the high of day was 7175, and that very much made me grumpy, whereas it makes me much less grumpy when we're dealing with half size. So do not cross the fortune cookie. Man, OJ, you're really asking me to add to this thing right now, aren't you? But yeah, in all seriousness, volatility is kind of agreeing with our friend Juiceball in the chat here, and we'll see that in the next chart. So this is the warm-up document. This is subject to change as the day goes on. Really what I'm watching are those levels. You can see they're all clustered together, extremely close. So I'm watching to fade the edges here outside of my little speculative MES short. So yeah, this document's available in the description of the video, by the way. So that's what we got going on in the warm-up. Not really too much to bloviate on, as they say. And really not too much going on in the macro chart here either. We're still in the center of the range. We did put in that potential swing low candle yesterday. So really watching yesterday's low. I think we get below that, you might see that unwind and a move toward the bottom side of this trend line here. I dare say maybe even 4100 in the SPX to spoil our friend Juiceball's 4150 plans. So really all I'm watching is that low from yesterday and then that high from a few days ago. So I think the upside breakout, there's a little more room today. Unless volatility gets going. And let's just take a look at volatility so I can show you what I'm talking about there. What does it get going look like? Well, it needs to hold above this high that we put in this morning. In fact, I'm going to move this line up right there. So we did have that divergence this morning, bearish for equities, bullish for volatility itself. Yeah, you're not seeing that follow through quite yet. So what I want to see is that hold above 20, and I think that if and when that does happen, it's a quick move to 2050 where I think there is decent resistance in the VX futures. It's nice to see for those of us looking for some excitement and volatility. We are outside this wedge. We're holding outside the wedge, so that does lend a little bit of strength to volatility, maybe a nice little base here at that inverse head and shoulders. We'll see what happens as the day goes on there. Again, really nothing until we start making higher highs there in the volatility space. So just one more chart. Like I said, quick briefing because nothing is really going on, so no point in wasting your time. Is our TPO. Okay, so maximize this for you. This is really going to be the only picture that I'm looking at in TPO wise today. Very zoomed in because again the range is super small. So I'm watching for a push up into this yellow zone here. That is our island value area that we talked about starting, what was that, the 18th? Yep, starting on the 18th, so starting earlier this week, and that is still holding as resistance. And to the downside here, we do have this big demand zone starting at about yesterday's low. So like I said, perhaps we do get that push below the low, and perhaps we do go to SPX 4100. Yet if we're not seeing the same move in volatility, again looking for the fake break, that is the OPEX modus operandi, I believe is how you pronounce it. Lots of fake breaks, and we've already seen one good one earlier today. So I'm going to post this chart on Twitter, and I'll keep everybody posted there. You're an island boy. Thank you, OJ, for the nice pop culture reference. I didn't realize that boomers were so in touch these days, so it's good to see. It really, really warms my heart there. So yeah, in any case, like I said, I'm going to be pretty active on Twitter if we get anything going on. I don't know if any of you have been noticed, the two of you that watch, but I've been trying to be a little more active on there just because I think it's a very, very dynamic market, and these briefings are good to kind of start the day, but as it progresses, it's important, I think, to keep updating what one is looking at. So I will be there. I will be looking at this chart, and once again, I just want to flash really the most important chart, which is going to be this volatility chart. If we get above that high, I think things can start to get interesting. So we'll see what happens there. Let's see what's going on. Price action. Okay. So let's see how my cute little MES position is doing while we're here. There we go. So it's green. I did take the stop, like I said, at 56.75. So that's why you're seeing the poor P&L there. That was the first stop. I will add to this. I think here if we close above the trend line, I'm going to flash my execution chart with ES itself. So that's ES itself. I did have that fake break on, but I took profits a little too early on that. I was aiming for that POC. I actually took profits at 49, like a Johnny, as they say. But really, what I'm watching here is this is the structure. So, it's trendline city. It's definitely messy. I don't like a lot of junk on my chart, but this is just kind of the range that we're in. That it's super junky right now. So what I'll be looking at to add this MES position in the next 30 seconds. Actually, we get a close below here, and I will give that a go. This is not my traditional trades. I'm just kind of playing for a move. I do think we go pop that prior day low. That's just because, again, it's OPEX, and they just love popping both sides there to stop run and get that liquidity. So I see a new chatter here, Goggin. I hope I did not just butcher that name, but nice to see somebody new here. Thanks for coming in. And that is really what I'm looking at. So again, Routine Trader on Twitter. I will keep everybody updated there. My lovely 14 followers, and let's get this MES ad right now. So we're gonna add it at about 41.49. Give it a go. And we're on the board. So we'll see what happens there. I'm going to keep this stop pretty tight. I'll probably close out the entire position if we make a higher high and go from there. So yeah. So thank you for tuning in. That's all I got for you. Newsletter, sending that out right after this. Retailtrading.com if you're not a subscriber already. And I'd appreciate any engagement either from there in the comment section of this video or, of course, on our good friend, the Twitter. So if you did enjoy today's content, as always, please give it a like. That helps YouTube algorithms, and sometimes it even gets these views into double digits, which is also very exciting. So regardless, make sure, cheers to you as well, Goggin. All right, so is it Gagin or Goggin? First one or second one? I'm going to go with second one because I see it there. So no, OJ, we're not keeping it trashy. We're keeping it classy. And I'm going to wish everybody a good weekend and see you all on Monday. So cheers to all.